is an old saying, figures don't lie, but liar figures. What you see is not always what you get. In the business world, we call it bait and switch. And you're right, it is totally illegal. I'm not here to knock others on advertising or false advertising, but to share with you from an insider standpoint as to how mortgage pricing works. Here is a copy of our internal rate sheet. The interest rate depends on many factors. In this chart, we will look at the pricing, depending on the purpose of the mortgage. Let's take a look at the lowest possible rate. This is under the heading High Ratio Purchases. If you have less than 20% down payment, your mortgage will need to be insured. The lending community view this mortgage to be the safest because it is insured. As you can see, this category has the lowest interest rates in the whole rate sheet. Let's take a look at purchases that have more than 20% down payment. In this case, CMHC insurance is not required. However, the interest rate will be higher. Its interest rate depends on the down payment. In the case of 40% or more for down payment, you will get a lower rate than with 20% down payment. These are called insurable mortgage, meaning you're not paying CMHC fee, but CMHC guidelines must be met. If we deviate from the insurer guidelines, for example, if one wants a 30-year amortization, it is still available, however, not under the CMHC guideline. In this case, we can still do the 30-year amortization at a slightly higher rate. There are also other criteria such as credit score, property types, etc. So far, we talked about various interest rates on purchases. In the case of a refinance, that is, taking extra money out by increasing your current mortgage, this will fall into a category of slightly higher interest rate. In fact, if you notice, this has the highest rate in the rate sheet. There are many other factors that also determine mortgage rates. Credit score, the property itself, the market condition, along with a few other factors that we use for underwriting process. If you see some super low rate, the question you should ask yourself is this: is it real? Do I qualify for it? How can they tell me the rate I could get without knowing my credit score, my ability to pay, like things like my income, the mortgage amount, and my property value? What are the fine prints? Why is it cheaper than anyone else? In fact, the most important question you should ask is this: is this the right mortgage for me?